All right, the Bitcoin chart doesn't look as good as it should look. I guess market is still processing the news in the EU and what the implications are of the EU. But there are some charts that are looking good. There are some charts that are giving us amazing positive signs. And the question is, how do we balance the one side, the Bitcoin chart going down, and then on the other side, looking at charts like this? So you look at Solana, and Solana is now heading towards the 200-day moving average. It's now at $130. It's not stopping. I think it's also had like 7 or 8 green days in a row. And then you've got the dominance chart, which has broken some real key levels. Sheldon showed us earlier that the Bitcoin dominance has actually broken below the 200-day moving average and has had a cross between the 20 MA and the 50 MA. So there's a lot going on. And the question is, how do we decipher all of that? Also, a deep dive into what the European regulation is all about. And we've got a great guest for you talking about that. So it's Friday. Fridays we banter, and today is going to be no different. We're going to sit here and we're going to banter. We're going to talk about Bitcoin. We're going to talk about altcoins. We're going to have fun. At the end of the show, I'm going to double your portfolio. So remember that if you have signed up for ByBit using one of our links, I'm going to just double your portfolio. And maybe because it's been so cheap, that we should maybe do like a 5x or a 10x the portfolio. What do you guys say? So let's do it. Let's do it. It's Friday. Let's have some fun. I always love watching the guest faces in the waiting room. So you get new people on the show, never been on the show, and then you watch their face when that song comes on, and they think we're like a bunch of maniacs. Last week in the back here, we had Michael Saylor, and when the song came on, do you remember how Michael's face was like smiling? He thought like, what the hell have I just signed up for? Like, what the hell did I sign up for? I'm on a channel of maniacs. That's what he said. Now this week it's this guy. Patrick Hansen is his name. Now he was sitting here. He was sitting here in the chat, and he was like, what the hell? Who are these people that just invited me to the show? Never heard of Crypto Banter before. Now he's wondering, why did these people, these maniacs who wear astronaut outfits that say lunatics on them, invite me to their show? Because he's like a serious guy. He's a serious guy. This is not our typical caliber guest. So Patrick, he lives in Berlin, right? And he is the head of strategy and biz dev at Unstoppable DeFi. Now, the reason why we have Paddy on the show today is because he was covering the EU vote that happened. He was the first guy to raise the flag, and he says, look, I don't mean to like be a wet blanket, but there's a big shit going down in the EU, and they're voting on a serious proposal. And so he's the guy that we're bringing on. Paddy, it's so good to have you here, buddy.
Yeah, good to be here. Thanks a lot.
Is this like a serious?
Indeed, by the intro, but I like it.
Yeah, because you thought you were coming to like a serious station, and here we are just going, get the fuck out of bed, bitches, go.
Yeah, exactly.
So listen, the reason why we wanted to get you on, is because we've been following your Twitter. Guys, if you don't follow his Twitter, follow his Twitter. It's a great Twitter. Sometimes it's a bit dramatic. Sometimes it's a little bit dramatic. Like the other day, you were a little bit dramatic. You were like, look, I'm raising big flags here that there's big shit going down in the EU, and you hope that the vote wouldn't get passed, right? And then yesterday, the vote did get passed, right? What does this vote actually mean?
Yes, exactly. So yesterday, 2 committees of the EU Parliament, the Economics Committee and the Libe Committee on Civil Liberties, they voted on what is called the Transfer of Funds Regulation, which is basically the implementation of the so-called travel rule for crypto transfers in Europe. And unfortunately, as I mentioned already this weekend on my Twitter thread, like which went viral, there are some passages in that regulation that are really worrisome, both for individual privacy rights, but also for the use of wallets in Europe. And I mean, I'm sure we can go into some of those details here also.
Okay, so let's quickly talk about what does it actually mean what was the law that was passed and what does it actually mean practically?
So the law that is passed, and it's not the final stage, by the way, of the legislation process. It still has to go through what is called the trilogue, so negotiations with the EU Council and the EU Commission. But essentially what the EU Parliament adopted yesterday says that from now on, if crypto service providers transact between another, they have to share the personal information of their clients with one another. And even more worrisome than this is another passage of the regulation, which basically says that when crypto service providers such as Coinbase or Binance, when they interact with what they call unhosted wallets, which are basically just normal crypto wallets, they basically have to collect, store, and verify the personal information, so basically the name, the home address, all kinds of personal data of the person that is behind that unhosted wallet, which is basically, which obviously is on one side just unpractical. There's no way that Coinbase can collect, verify the information of someone that is just using a MetaMask or Ledger wallet. And on the other hand side, it's also huge infringement of just privacy rights. If all those crypto service companies, they start collecting this personal data of like what public address is attributed to what kind of person, home address, and so on and so forth. So these are some and other passages as well, but these are the most like worrisome to me.
So it means that if you're in Europe and you're sending me money to my MetaMask wallet, before Coinbase can send money to my MetaMask wallet, they need to verify that it's my KYC, so to speak, right?
Yeah, I mean, in essence, they would have to KYC you in order to let me transfer some crypto to your MetaMask account from my Coinbase account.
Okay, but let's look at the practicalities. How will they link my ETH address on my MetaMask account, my wallet address on my MetaMask account, to my identification? I mean, what's the link between a wallet address and an identification? What's to stop me saying that I'm the owner of a wallet, showing them a picture, and then somebody else saying, look, I'm also the owner of the wallet, because the wallets aren't set up with identity capabilities today?
Yeah, I think the practical consequence of what's going to happen is, and we can see that playing out already in Switzerland, that has this kind of travel rule already implemented, is that Coinbase will basically ask me, like, who's the owner of that unhosted wallet? And I will say, it's myself. I will give them my name, etc. And since I'm already KYC'd, they already have my information. But on top of that, they will require that I, with my private key, sign a certain transaction, a certain message, or that I do a micro transaction
and pay the gas costs and pay the gas fees.
It depends. There are some messaging protocols which would allow me to just sign a transaction without paying for gas fees. But essentially, yes, they have to make sure that I'm really the owner of the private key, which is obviously quite burdensome for them. It's a costly operational process to implement. And that's why I'm saying probably the big players, the big exchanges, they will be able to introduce those kind of compliance tools. But I'm also saying I think most of the smaller and medium-sized crypto players in Europe, I guess they will just be too afraid of the compliance hurdles, too afraid of the costs involved. And that's why I think that many players, they will just refrain from interacting with unhosted wallets in the future.
Okay, now let's talk about how stoppable this legislation is. So it was passed. Now it goes into the trilogues, right? What's the process from here? And I don't know if it was you, or certainly I read some tweets yesterday which said we've lost the battle but not the war. So where along the process now can we stop this, if it can be stopped?
So basically, from now on, the negotiations will move to the so-called trilogues, which are basically negotiations between the three legislative bodies in the European Union: the EU Commission, the EU Council, and also the EU Parliament. And those three bodies, they each have their own position on this regulation, the transfer of funds regulation, and they will negotiate their positions amongst each other. And that's where the crypto community, the lobby organizations in the EU can still get active, can try to introduce some changes.
But
unfortunately,
some changes and getting active. If it's been approved, is this not just a fine-tuning process? Is this next leg not just a fine-tuning process? Now, what I'm understanding is, how do you fine-tune something like that? If they've said, look, non-custodial wallets need to be verified, I mean, how do you fine-tune it? You maybe define the word verification. You maybe define what kind of verification. But it sounds to me like it's passed. Or am I seeing this all wrong?
I mean, it is true that they won't open up all the basic amendments and all the basic principles of the regulation. We won't be able to change that. But my goal, and I think I'm quite optimistic that we are maybe capable of doing so, is to change the wording back to the initial wording of the European Parliament, which required those companies to collect and store that kind of personal data of the owners of unhosted wallets once they interact with service providers like Coinbase. But what I want to get rid of is the additional requirement to verify that information. And I think because that's the one that is, operationally speaking, really costly and really burdensome. And I think there are ways that we could get there, but obviously it will be tough.
Okay. James, are you surprised by this regulation? I mean, you've been here for a while. Your background is very much in the traditional world of finance and stuff like that. Are you surprised that we're getting this kind of regulation?
Well, it's interesting if you've been monitoring, the whole European Union, the ECB, Lagarde, the WEF, all of this points towards more authoritarian control. And this is shot squarely at that. And it's funny because the EU used to be the global leader in privacy law and policy, and how they've turned, I'm interested in what Paddy thinks, is quite shocking. But basically, I don't think it's enforceable, just pumping €1,000 to somebody in need, or a cousin, or your son, or whatever in Europe, and for that to be regulated is a Herculean task. I think the people will revolt and protest pretty much over time, and it just drives everybody towards DeFi, DEXs in a very rapid manner, and it accelerates, in my opinion, the demise of all fiat currencies. Like, everybody's already changing their mix of reserves after what happened in Ukraine. So from that perspective, I think they're just shooting themselves in the foot, in my regard.
But I'm not surprised. I mean, I don't think that it's logical to think that, any regulator will allow for thousands and thousands and even millions of dollars to flow without having some kind of surveillance on the money. I mean, I think we were kind of naive to think that it wouldn't be passed. What am I missing here? Like, when you do a banking transaction, whether the transaction is $1,000 or $10,000, the banks know exactly where it's going to. Both sides of the coin are KYC'd. Why did we even think that in crypto they would allow it to run rampant without doing that?
Well, I think the US tried something similar with non-custodial wallets as well back in October, November last year. And there was just an uprising of high net worth individuals and different constituents, telling people, the legislators, they could not do this. And I think the similar type of thing will probably happen, at least bump up the limit to, I don't know, €100,000 or something. I don't know. But it's people will find a way in crypto, and regulation is always 5 years behind. Same with taxation. So we'll see what happens. It'll be interesting to watch.
Paddy, what's the timeline here? Patrick, what's the timeline here? How long until this is implemented?
So normally the position from the European Parliament will now be announced in the plenary session of the EU Parliament sometime in April. It will then move on to the trilogue negotiations that are already mentioned. That should last normally a couple of months. I would say maybe like five to 6 months, half a year at most. And then there is a transitional phase. So there's basically an implementation period for all those crypto companies in Europe to ensure full compliance with those measures. And that is 18 months. So normally once the adoption enters into force, that should be later this year, probably autumn this year, you have another 18 months to add, and probably those measures will then be applicable from early 2024 onwards.
Before we let you go, is there anything that Europeans, non-Europeans should be doing now to try and get this to be as most positive outcome as possible? Is there anything that anybody who's watching the show in Europe, we've got about 30% of our viewers in Europe, is there anything that they should be doing now to make this easier?
Not today and not tomorrow, but as soon as the trilogue negotiations will start, I think we will need a huge amount of public support for our positions. We will need, especially the professional lobby organizations and industry associations, they will try to negotiate with the stakeholders in the EU, with the Council, with the Commission, with the EU Parliament. And there it always helps to have public support. It always helps to have thousands and thousands of people, crypto investors, crypto enthusiasts, reaching out via email to members of parliament, for example, to council representatives, to commission bureaucrats. And so both privately, via email, via phone, to just reach out to your member of parliament, but also publicly to just tag them on Twitter, to let them know that what they're doing is a huge infringement of personal privacy and has dramatic consequences on the use of wallets and then on the competitiveness of EU businesses. So public support is the number one priority, I would say, for the normal just crypto investor in Europe. Feel free to obviously follow the lobby organizations that are active in Europe. There are a couple of those, for example, Blockchain for Europe, INATBA, European Crypto Initiative, and others, Bitkom. Feel free to follow myself. I will tweet regularly on that topic, and I would try to mobilize all our voices.
All right, guys. You can follow Patrick. His email, his Twitter is @Paddy _Hansen HANSEN. Patrick, thank you so much, my friend. Thanks for the insight.
Thanks. It was a pleasure.
All righty, let's bring on the banter guests. We've got Scott Melker, we've got Chris Zaknun from DAO Maker, and we've got, of course, James from Invest Answers. Welcome, guys. Scott, how was your stream?
It was great, man. I had actually my mentor, Christopher Inks, on for the first time in absolute ages, which I'm always in awe of him. So for me, listen, people follow all of us for advice, but there's also people that we follow for advice, and he's the one definitely for me. So it was really great.
Go and check it out. Go and check it out. All right, Chris, what do you think? What do you think this does to Bitcoin, to crypto? Is it relevant? Are we overreacting? Is the market pulling back an overreaction, or is this just a healthy pullback because we went up too quickly?
Well, we are mostly based in Europe, so I'm thinking, how would this affect us? And I don't think it would affect us a lot, because who are the people who send out money from exchanges? It's the owners of these wallets. So I would say most of the money going in and forth is already people who already KYC'd before this implementation happened. So it is a pretty steep step. I don't see how they can regulate it outside of CeFi. That's probably why they start with CeFi. And CeFi already prepared for AML laws for years. I think they've always been very, very strict on anti-money laundering and counter-terrorist funding. Let's see how it turns out. I can just say it will not affect us much.
Scott, what do you think? Do you think that this is going to have a bit of an impact, or do you think that the Bitcoin price pulled back because of that, or do you think that the Bitcoin price pulled back because we had 8 positive days and it was just time for a cool down?
It was time for a healthy retrace. This has absolutely nothing to do with the vote. Like, to be quite frank, the infrastructure bill last year had everybody up in arms and talking about the impact that it would have. Not many people are talking about this. I don't think this has even gone through the trading community enough to have a meaningful impact. I think it's now just another piece of news being absorbed in the cycle. I mean, we just had 4-hour RSI go up to like 85, right? I mean, anyone who's looking at markets and watching what's overbought or oversold, you know that it was time for a pullback. I can honestly say that I think across Twitter, this pullback to 45-ish was probably the most anticipated and obvious pullback that I've seen in a long time. We had 48. Everyone was saying, I'll buy again at 45, right? It's going to pull back there. And RSI in the 4-hour went all the way to oversold in just that move. Last time we were oversold, it was 37. Now we're oversold at 45. That's a pretty good sign of a bull market and a healthy pullback.
Okay, James, do you agree with that view?
Yeah, definitely. But what is very interesting is some select names are on fire. And they've just, I won't need to mention any, but it's interesting, the bifurcation of the market, you know, the mothership, 800-pound gorilla, and then you've got select names that are the last, are beginning to be recognized for their value. And it's extremely interesting to watch the institutional money flowing into very, very few select names, but there is a lot of money. Half of all money last week went into one name. So that was pretty.
Look, I know you don't want to say the name because you've been accused of being a paid shill.
Yes.
But because we know you're not a paid shill, right? I mean, you're talking about Solana, and I think when you're talking about half of all the money, you're talking about the CoinShares report, right? That's the CoinShares report. CoinShares is a company that creates products for institutions primarily to invest in. And we saw a spike in Solana, and I think we spoke about it on our show, and we said, look, it looks like the institutional money is actually flowing into Solana. It then looked like Solana's had gone on a tear since then. But fundamentally, what's causing this tear? Is it because Solana was just completely undervalued and oversold? Or is something changing about Solana? I know we've had OpenSea announce that they're integrating Solana, but this looks bigger than just OpenSea.
It's a number of factors. I mean, it doesn't take a rocket scientist to figure out. If you look at Solana and its relative market cap to, say, something like Ethereum, it was less than a tenth of the market cap a few days ago. And that just mathematically doesn't make sense. It's better, cheaper, faster. Yes, it's still in beta. Yes, it had an outage in September for 17 hours. Yes, it got congested 3 times since then. But that's what happens to fast-growing chains. I mean, I always say, like, my joke is Solana is already ETH 3.0. The world just doesn't know it yet.
That's not a joke. That's the truth. I did a show 2 days ago, I think, when I asked the audience a question, and the question was, which one would reach $250 first? Is it going to be Luna? Is it going to be Solana? Or is it going to be Avalanche? Now, the irony is that when Luna was running, everybody said Luna was going to be the one. I ran a poll on Twitter, and a week later, 10 days later, I ran the same poll on Twitter, and the results were completely different, which just shows what a difference in sentiment the 10 days makes. And I'm going to pose the question to you guys: which one does hit $250 first, Solana, Luna, or Avalanche? Chris.
Well, that's a direct question to what to buy, no? I'd say this. Terra depends purely on the adoption of the stablecoin, which is usually much easier as a product. Avalanche has all the American money behind it, and they're doing really well in getting institutional money. And Solana is just generally the institutional coin, where all the big, boomer people want to buy into it. So given that there's so much FOMO, I'd say Solana is probably a good bet. It's just so much money wanted to get into it, and these people don't have much time and to understand what they want to understand. So they look at one thing and they buy into it. It's hard to say.
It's funny that you say institutional money, because I mean, if you look at the average, any chain that started in the last 2 years, the average holding between insiders and VCs is about 46.1%. And things like Luna, Phantom, BNB, Salo, Flow, all have way more institutions and VCs behind them than Solana. But Solana, because of what Chamath Palihapitiya said once on the internet, everybody associates Solana as being the VC coin. But again, anything launched over the last 2 years that is halfway good is VC backed, in my opinion. What do you guys think?
I mean, if you look at the VCs and who they're backing, and I showed this yesterday, but each one of them has their own VCs backing them, and each one of them has a completely different team of VCs backing them. So I'll try and find that chart again. I know I've got it somewhere, but effectively, what you realize is that they all have VCs backing them. Solana has Multicoin, Alameda Research, and Jump Capital. Then you've got Luna, which has Galaxy, it has Delphi Digital, it has Jump as well. Then you've got Avalanche, which has got Andreessen behind it, it's got Polychain behind it. So I think from a VC funding point of view, I think they're all pretty equal, I think. I don't know. What do you guys think? Scott, what do you think?
Yeah, I think that everything's backed by VC because that's the only way that people are allowed to raise money, right? So I think that it's kind of nonsense when Jack, obviously famously a few months ago, sort of came in and said that there was a problem with venture capital and that the VC was going to make all the money and that the people were not. That's not a fault of crypto. That's not a fault of any of these projects. That's a fault of the system in the United States that only allows accredited investors and VCs to invest in things. If you're a project and you want to raise money, you have to do it in a certain way if you want Americans involved. A lot of those funds that you just mentioned are in America, right? If you're an individual, you have to be accredited. You have to either have $1 million or be making $250,000 a year. You have to prove that over multiple years. KYC, AML, huge process. Nobody's going through that to allow your average person to invest. It's a nonsensical law. And it's a nonsensical narrative that any of these projects are doing anything wrong by raising money from VC because it's the only place you can go and get millions of dollars when you need it legally. So yes, They are all equally backed by VC. No one is more VC than the other. If you want to make a narrative, maybe go look at what they've bought and sold and if they're still holding it or not, and which VCs are doing that. But these are all massive long-term investments, I think, for all of the VCs that you just mentioned. I don't think any of them believe that we've topped or that the bull market has even begun for layer one competitors.
Okay, so let me ask you guys the question directly. So you have Solana backed by Alameda, Multicoin Capital, Hashed, one of my favorite VCs, Jump Trading. We saw how strong Jump Trading is, but Jump Trading is a behemoth. And then you got Luna, which is backed by Hashed, Arrington XRP Capital, Galaxy, Pantera. And then you've got Avalanche, which is famously backed by NGC, Polychain, and Andreessen. If you guys were allocating $10,000 of your portfolios across these three coins, what would your split be today? And the investment is today, at today's prices, and the holding period is 12 months. What would your split be between these three coins? And when I say coins, I mean coin and ecosystem. James, I'm interested.
I would probably go three ways, but I would personally, you asked the question, which one gets to 300 first? If you're a betting man, you'd be stupid to say anything but Solana because it's 30% closer, right? The others are trading about $100. I don't know. I like money, so I would obviously bet on the one that's closer to that bar. But I would probably personally go 5,000 on Solana and 2,500 on each of the other two.
James, I want to hear your answer here because this is quite interesting because I know you're a big Solana fan, but I think you also like Luna a lot, right?
Yeah. So, well, first of all, I invest where the money is. Okay. My two biggest positions are Bitcoin and Tesla. So I chase, if there's money to be made shorting oil, I'll do that. So that's me, everybody. I just follow the money. Now, I am absolutely obsessed with DeFi. I believe the disruption that's coming, that's going to be underpinned by blockchains like layer ones, is a massive market. And I think that cannot be ignored. And that's why I love things like Ethereum, Solana, etc. And they are my three biggest crypto bags would be number one, Bitcoin, number two, Ethereum, number three, Solana. And then my fourth biggest position is Luna. Now, Luna is a game changer because of what they've done, taking a stable coin and backing it with the hardest asset on planet Earth. That's a game changer. So from that perspective, completely changed my investment thesis around Luna. I always was in it for speculative purposes, but now it's a keeper. And I do believe in your question is really interesting because we built a model as to how we tried to back into the algorithm for how UST and Luna works. And theoretically, if certain thresholds are hit, it's possible if 99.9% of the supply is burned, that will yield a price of about an $80,000 Luna. But if the market cap of UST matches that of USDC today, that's $255. So Luna price.
Not impossible. Not impossible.
It's funny, your $250 target price is interesting, but I would still have Solana being hitting it first, Luna second. And the problem I have with Avalanche is the inflation. And I don't like inflationary tokens. Now, Emin called me out on Twitter saying I was full of crap. I'm not. And I can prove it. So that's kind of an issue. I just don't like inflationary tokens. I don't like inflationary fiat. I don't like
Chris, what do you think?
I fully agree with what we just said. I think one as a buying opportunity Avalanche. You know, there's still 50% inflation in the token metrics because it's much younger than Solana, right? I was part of like private sales in Solana in 2018. By now, all the distribution happened. That was also commented on, that the early buyers were all distributed. The good news is in Avalanche, the small buyers on their own sale are also all invested, but the staking rewards are still almost 50%. I do see a lot of potential in Avalanche. I do like staking, but I would put my money on Terra just because it's such a game-changing product. You know, all you need to do is get one really good product, and you can scale up a stable coin a lot more than infrastructure. Because it's
So you know
easy.
what? So it's very public that my biggest position is Luna, not because I bought the most, but just because it was my most successful investment ever. So it's very public that my biggest position. In fact, I showed it the other day. I wonder if I actually have that over here. Let me just see if I can find it. But I showed the guys. I don't have a chart. Do we have the Pac-Man chart? Let's get the Pac-Man chart up here. So I said that. But the one risk for me around Luna, and the reason why I'm de-risking myself slightly from Luna, is Luna revolves around one single concept, and the concept is around an algorithmic stablecoin. So if for some reason, which is unknown to anyone, the algorithmic stablecoin depegs itself, and for some reason it doesn't repeg itself even with this Bitcoin backing, then the whole concept of the Terra Luna blockchain kind of has no real value. Whereas if one or two experiments fail on Solana or Avalanche, for example, because it's a base layer blockchain, then you can kind of you work out that multiple other ones may succeed. And that's for me why I was getting sleepless nights at one point, where I said, look, you know, it started off as being 1% of my portfolio. It's now 85% of my portfolio, or 80%, or whatever the real number is, because I've never sold. I've only bought, and I've got all the staking rewards. And so I went from that to that. That's pretty much what my portfolio looks like at the moment. And so now I'm starting to de-risk myself. And it's a painful process because I love Luna. I'm emotionally attached. I know I shouldn't be emotionally attached to investments, but I'm emotionally attached. And I don't know where to put the money. So my one option is to put it into Bitcoin, but Bitcoin is great.
Put it into Bitcoin, man.
It's a store of value. And I believe in altcoins more than I believe in Bitcoin. I don't know. I believe in altcoins more than I believe in Bitcoin. Then I'm thinking maybe put some more into Solana. Great. That's what I've been doing. And then whenever I think about putting more into Avalanche, I just feel like I'm changing the risk profile of my portfolio. So I don't know what you guys would do. I'd love to hear what you guys would do. And no, not XRP, obviously.
Yeah, I can only tell you that, like, I know it's an emotional attachment. You and I have talked about the emotions of trading altcoins countless times. So it's pointless, but yeah, you got to rebalance, man. You know, like any portfolio manager in the world would be having a literal panic attack looking at that portfolio, and probably would pass out and not be able to make it to work the next day. Right? You got to rebalance. I would say you have to get back to where, you know, you're 40-50% Bitcoin, in my humble opinion. And beyond that, I don't know, man, go buy some land. You know, like you don't have to de-risk within crypto. You can go ahead and buy yourself something really nice and valuable that you can use that has utility in the real world.
I know you guys all have land. I know we've had various conversations. I'm not going to disclose what I know. You guys can feel free to disclose it if you want. I know Chris's background is not a hotel room. Let's just say that. Now the question is, every time I've bought land, it's been such a headache to get the 1 or 2% or 5% yield. I've had to manage tenants. I've had to fix air conditioners and swimming pools, where I can just take USD and put them into Stargate, or UST and put it into Anchor and get 20% and forget about it. So land for me is not an investment. You know, the best thing about land for me is Airbnb, because I can go and use somebody else's land whenever I want. And when I leave the headache behind.
Yeah, but Rand, that's the point. That you leave the headache behind. You go to sleep thinking, wow, what happens tomorrow? Maybe everything is gone. Land is secure. It's a very secure way to stop being nervous, maybe have a better sleep, and just store your value outside of crypto. Bitcoin is the best store of value, but you also need to diversify that store of value. And
does land in the metaverse count?
No. No,
absolutely not. They can make more. Listen, I happen to live in a place that has very beneficial tax policy for land. I live in Florida, as everyone knows. You buy land in Florida, if you put like one cow on it or a couple bales of hay, you don't pay property taxes ever. right? So it might be different here than it is where other people are. But once you buy the land in Florida, if you don't build anything on it, you can literally sit on it and watch it appreciate without it costing you a single penny. In fact, you make money on it.
Okay, so listen, the property show is happening on another channel, also on another day. Let's carry on talking about.
Invited the boomer.
Let's talk about crypto. So this recovery that we've seen in Bitcoin, we had the big trend line broken. Scott, you'll appreciate this, and we went through. We had a perfect retest, and we started to recover. A lot of people were saying that this is a fake recovery because this is Do Kwon. This is Do Kwon hype machine, coupled with a couple of $125 million purchases, creating momentum, and eventually that's going to dry up. And then when it dries up, then maybe we're just going to go back down again. What do you think? James, I see you smiling. That smile means I've got something to say.
Well, it's my thesis for Bitcoin from day one is supply and demand. It's all about money flow. It's the easiest thing in the world. So Do Kwon spent 1.3 billion already. 1.7 to go. They have this money allocated. And then after that, continuous minting. Then Sailor, 205 million and more to come. And I know for a fact, those hedge funds, high net worth individuals, family offices, they're all there. They're FOMOing, professional money managers are FOMOing. Yeah. So my question is, who the hell is selling Bitcoin? I mean, it's as clear as day. I don't want to sound like a hopium slinger here, but I mean, yes, it'll be volatile. But we know where this thing is going. We just don't know when exactly. Like I said yesterday on my channel, I believe, between now and Christmas is going to hit between $70,000 and $98,000. So
I agree.
That's a foregone conclusion. But the question is, who is selling? Maybe they're selling their Bitcoin to buy Luna or Solana or Cardano or something. I don't know. But it's just, that's my question. And also, if you look as a very interesting chart on Glassnode I saw yesterday, look at the OTC supply. That's the biggest supply crunch thing I've ever seen. Once OTC gets drained, then we're going to see some parabolic action.
So we did a show around Bitcoin. We spoke about the OTC supply, and that came from a tweet where Frank Chaparro said that the OTC there said that no one's selling. So I phoned my OTC dealer who's based in Hong Kong, and I said to him, look, how's it going? And he says, I haven't found it this hard to buy big blocks of Bitcoin since the early days of Bitcoin. He said he just hasn't found it this hard. He's got huge orders and with price targets, and he says we just cannot get the supply. So it does feel like we're going into a bit of a supply shock stage. I don't think anyone can deny that. Yeah. What about ETH? So Chris, you knew I was going to do this to you, right? You knew that this was coming. So let's do it. I mean, we've got researchers here. They're very smart people. They found this. They would find anything. They'll find everything.
Yeah, sure.
I personally do not believe in Ethereum 2.0 because it doesn't make much sense. But Ethereum needs to maintain people to keep telling them that it's something in the future, because right now it doesn't work. It does not work at all. You have to pay like $100 to make one trade. It's not possible, right?
Okay, so that was you, if I'm not mistaken, that was about a year ago. It was July 23rd, 2021. So almost a year ago, almost a couple of months away from a year. Has your view on ETH changed, especially now that there is a date for the merge? Well, not really a date, but a period for the merge. They're talking about June 2022, that they're going to merge the POS chain and the proof of work chain. Has your view on ETH 2.0 changed?
Do you think it will not fork? And if it will fork, is ETH.2 a new coin? And if it's a new coin, what's the difference between ETH.2 and Solana and Avalanche and all the new coins that came out since 2018, 19, 20?
But it's not a fork, it's a merge.
That's
so I think,
will it fork? Because it could fork. It's all about consensus. Now,
wow.
The question comes down to, people want to maintain the value of ETH. And the transactional speed only matters if the transactions are small. If I trade $10 million, I don't care about $100. Do we need ETH to play games? Because how important is it that if let's say we play Call of Duty, and I think many people play Call of Duty. So you see me and somebody else, we're kind of clicking at the same time, we shoot each other, we put them on the blockchain. Then we have transactional viability to see who shot who first. What is the value of that transaction? It's very low. Because, maybe we need another blockchain for transparency, But what we need ETH for or Bitcoin for could be global trade between countries. What we need ETH for is DeFi, like big stuff. And we have Solana, we have Avalanche, we have other things. And my statement before saying they need people to believe in the future of ETH is because they're constantly being attacked by new blockchains. So they need to tell people something. But realistically speaking, maybe it's not a good thing that ETH gets cheaper, because the main value of ETH is people buying $100 of ETH, which is burnt. I bet all of us have a bunch of different wallets which have some ETH. That's a beautiful burning mechanism. You take that away, it's not good for ETH. And the ones which have to make the decision to go to POS are the miners. So basically, we are going to give away all our power to the whales, because just because you have a lot of ETH doesn't mean you can vote. You need to spend your ETH to buy mining equipment. So let's see, it hasn't happened so far.
Let me get this straight. Are you saying that even though there is a merge of the chain that's planned from proof of work to proof of stake, you're saying that there's a risk that we will have a fork and people will continue to mine the original Ethereum chain on proof of work? And that
if you have $50 million in DeFi, you want to be on proof of work or proof of stake? Because most people agree, I think we can agree that proof of work is more secure. That's why it's more expensive. And if you want to play a game, then go to Solana. But if you want to do 10 billion, 100 billion in DeFi, I would prefer having it's great, ETH is great. It's a bit expensive, but Bitcoin is super slow. It's like 1 hour. Man, we can't use that. But I don't mind paying $10 or $100 to make $100,000 trade. It's a great product right now.
So you think that there could be a fork and we'll end up with two chains? We'll end up with the proof of work chain and the proof of stake chain?
I believe that's possible, yes.
Wow. Okay, James, what do you think?
I don't think so. Well, there's three things I like about Ethereum. One, it's the incumbent. It's the 800-pound gorilla. Number two, everything is built on Ethereum. Like 70, 80% of all DeFi is built. Number three, the Ronin Axie Infinity guys have to buy $600 million worth of it right now. And I think that's why it's spiking. I think they said, oh, we better get in while it's still cheap. And of course, going deflationary. But I plan on exiting ETH once it hits a certain target and moving to better chains until I get proven wrong. I like many things about it, but I think there's better, cheaper, faster stuff out there.
So are you telling me that when I take my money out of Pac-Man, I should not put money into ETH? You don't think it's a smart move putting money?
It is between certain layers. So think about like a $3,000 ETH. Yeah, I wouldn't buy ETH personally unless it's under $2,400. That's kind of my threshold because I like things that double or triple. And then I have my price projections for ETH where I think it's going to go this year. And that's how I play. But at this level now, 3,500, I would not buy.
What is your price projection? And I know your channel, by the way, if you're not on James's channel, we'll put a link, or there is already a link down below. Go there because it is one of my go-to channels. So to be honest, my go-to channels for deep dives are probably Coin Bureau, but my go-to channels for anything that requires models and modeling is to go to James's channel. And then my go-to for long-form interviews and good charting is Scott's channel. So that's how I play and that's where my friends come from. So what are your price targets? What are your price targets on ETH, James? Just give us an idea and maybe point us towards a video that you're making or made where we can go and watch the whole thing.
Yeah, so one of the things I built a lot of price models, which are based on, I take traditional world valuation models and compare them back into discounted cash flow models like everybody else does. And for ETH, it's difficult because right now their total TVL and activities is just being nibbled away by all these other layer ones. And that's concerning to me. Number two, the layer two nibbling away at all of the activity is kind of strange. And what our friend said exactly about institutions, I think 76% of all transactions on Ethereum today are institutional anyway. And they don't care about that $100 gas fee. So it is tricky, but definitely this thing is going to between 6,000 and maybe 8,900 again before Christmas of this year is where I see ETH going. But a lot of that, the problem is a lot of that hinges on what they don't call ETH 2.0 anymore. And the launch of that, the merge. And I personally, the way the concentrations are with whales, I don't really like the idea of the POS merge because it is very much like a Cantillon effect that we see in many other industries that we don't like. So just my take.
Okay, Scott, what do you think? First of all, do you think that what Chris said about a two-chain solution or two-chain outcome is a reality or a possibility?
That'd be really forked up. I hope they don't fork us, so to speak. Hit get forked. No, I don't. I mean, anything's a possibility, and you'd be ridiculous not to admit that there's a chance of something. But I think that that's a very low-level chance that something like that happens, but definitely worth having on your radar. Listen, I'm a huge Ethereum bull. I'm not particularly concerned about the merge. I'd be surprised if we're not at 10,000, by the end of the year with much higher targets down the road. And I can tell you, I'll steal it from someone else. I've had two people on my podcast that have used Manhattan as an example for coins. First, it was Saylor who made the point that Bitcoin was digital real estate in Manhattan, which kind of went viral after that. Then I had Asib Qureshi from Dragonfly come on. Unknowingly, that Saylor had said Ethereum is Manhattan, and all these other chains are the smaller cities in America, right? Solana can be Denver, and San Francisco can be Avalanche or whatever. There's a reason, as Chris said, that people are willing to go pay the fees to live in Manhattan, right? It's where the action is. And that, to his point, it's the network effect. And when I said, isn't Bitcoin Manhattan, the granite, the building? He said, nobody gives a shit about Manhattan if nobody lives there. The granite's worth nothing if everybody moves out. Right. And that was his point about Ethereum, was that you have the network effect. It's where everybody wants to be. As the other guests have said, it's where people are building. It's where DeFi is at. It's where the TVL is. I don't see any of that changing. And I think institutions will continue to invest in and use Ethereum. And they don't give a shit if you have to pay $500 for a transaction. And by the way, it's been like $5 or $9 of late anyways to do something on Ethereum. That was a very sort of flash in the pan thing when we were paying that level of fees. But I think that things will change, and I think that nobody's going to have a problem paying it.
I'm still a big ETH bull.
Yeah.
Right. I just think that ETH 2.0 is a big risk to ETH.
You can't discount the fact that there is a risk. I mean, this is arguably the hugest fundamental change we've ever seen in crypto, right? I mean, for anything this big. So you have to be aware that there's a risk that it goes wrong. I just have confidence that won't happen.
Yeah, I mean, I guess there's a risk that everything goes wrong. I mean, we saw the DDoS attacks on Solana, and there's a risk that everything goes wrong. I think with Ethereum, there's much more at stake because the plane is full of people and full of passengers and full of money and full of VCs. I mean, I don't mind if the VCs go down with the plane, but I mean, if everybody else, I hope, stays safe.
Thank you guys so much. I literally have to record a podcast in 20 seconds, so I got to go. Chris, guys, it was great seeing you guys. Always a pleasure. Thank you, man.
Beautiful. I'll keep the conversation going with the two of you guys. Let me just get Scott off the stream because he does have to record a podcast. Let's look at narratives we're now going into Q2. Today is the first day of Q2 2022. Chris, you're very close to the fire when it comes to narratives because, I mean, being in the launchpad space, in the DAO Maker space, you get to see what's being funded, what before time. Yeah. What kind of narratives would you be investing in now? Like, would you be investing in privacy? Would you be investing in social tokens? Would you stay with the layer ones? Where would you start allocating your money for the remainder of the year?
Sure. So we try to be always ahead of the narratives. So we called GameFi in like January. So it takes 4 months to position yourself. So in 6 months when it hits, you're at the right place. We position ourselves for social tokens with BBS and a few other people. There's a lot of talks of ZK, SNARKs, privacies because of regulation, and also because of RegFi, so regulatory frameworks. These are the three narratives that are like people hushing back to back, and they make sense.
Okay, James, what are you looking at for the remainder of the year? I mean, obviously, we all talked about Bitcoin. We all spoke about the layer ones. I think that's become the obvious narrative. And, if you kind of look at I'm going to call it our calls, but if you look at our model portfolios, you can see that the hodl ones are the ones that we're all comfortable to hodl, which is, if you look at them, they're they're all actually layer ones. And then when you go to the gems and you go slightly more risky, they become DEXs and cross-chain protocols and stuff like that. What narratives are you looking at now?
Well, I'm looking at, first of all, I look at the macro world and just we're heading down the path of a reset real fast. I mean, if you look at like the central banks and the Feds, etc., they've all lost control. Money printing will continue, and that points to the whole Bitcoin store of value narrative in a big way. Then you've got all the mess of, China shut down, supply chains, inflation is going to continue, energy costs are going to explode. So again, points towards the whole world of Bitcoin. Now, the other thing that I look at is, again, I go after the big prizes, and I still think DeFi is huge, and that points to layer ones, some layer twos. The privacy stuff, was never too into the privacy stuff because I believe that the institutional investors won't invest in privacy because it's frowned upon by regulators, gives them a black eye. But I do believe there is a need for it. If there's a way they can get a friendly solution, that would be red hot right now, especially in Europe.
What I was about to say, I think what we've seen in Europe is not going to be, I think it's going to become much more prevalent down the line. And so I think that privacy plays, I thought last night, if I was in Europe, what would I do? And what I would do is I would have put my money into a Tornado Cash or a mixer. Let's use Tornado Cash as a mixer for now. I would create a burner account, which is my intermediary account between me and the exchange. That would be one KYC account, but that account would only ever interact with Tornado Cash. And that way they can KYC my interim wallet. So I'd get my money off the exchange, and then I would do whatever transactions I want through Tornado Cash, and then they could never trace any of my other wallets. Now, I don't recommend that anybody in Europe try that because, I don't think that you should unless you want to, because, maybe you want to. But I thought that narrative would actually really take off. I think another narrative which makes a narrative is decentralized KYC. So decentralized identity, because I guess that's probably one thing that I haven't seen much of, which is decentralized KYC. Where are the decentralized identity KYC providers using some kind of zero knowledge proof or something?
Yeah, well, it's interesting because I think Matic just came out with something. I didn't dig too deep into it, but some caste system registration platform within India. I thought that was kind of interesting. I just think all of the stuff that's happening in the world, the whole macro backdrop is pushing the world at 100 miles an hour towards decentralization, towards DEXs, towards mixers, etc. The problem that the regulators don't understand is they don't understand the space. And they don't understand how easy it is to evade the space. And the smart money will move. The people that will be left with their pants down, they're not moving a lot of money anyway. So I'm not that concerned about the European regs. And you can see that the Bitcoin price isn't concerned that much either. And April's going to be a great month. So we'll see.
I think April's going to be a great month. We also know that, I saw this, which I don't usually like these things, but I saw a tweet around April being, traditionally, here we go. So historically, the most bullish month, the tune of plus 1.68. So historically, April is a very, very, very good month. I don't usually follow this bullshit because I just think if you look for the statistic and you look for the pattern, you'll find the pattern. One last thing I do want to talk to you guys before we go, and I think, James, probably you're the most qualified to talk about this here, and that is the inverted yield rate, the inverted yield curve. What does this actually mean for the layman who's watching the show? And they've heard all this talk about recession. And they've heard all this talk about, when the 2-year crosses the 10-year, then, we're definitely talking about recession territory. Maybe just walk us through what that means.
Yeah, it's real simple. It's typically the first red alarm fire that the financial markets are broken. So imagine you want to borrow, and this happened yesterday, and it happened again this morning with the employment law. If you can borrow for a 30-year fixed rate at a cheaper rate that you can borrow at a 5-year rate, then the markets are broken. So whoever would do that? Who would borrow short term? So this is basically what this points to. And here you can see the crossing of the 10 and the 2-year on the US Treasury. And all of the financial markets are really, really broken right now. We saw the yen lose 9% a few days ago in one day. For a currency that's large, that is that big, to lose that much value overnight is staggering. It's like a meme token almost. So it's real simple. The financial markets, the debt markets, the bond markets, all broken. The monetary system has lost control. The central banks have lost control. They're panicking. They don't know what to do. They are backed into a corner. And I just tweeted something yesterday actually on that. I talked about just the US debt per capita, the growth of the US debt, and the amount that's taxed per family, per individual, and how either the population of the US needs to grow by 50x assuming there is no increase in debt over time, or the taxation will take something like 48,000 years to pay off the debt that exists today. Everything is bankrupt, and that's the problem. And people need a hard asset. So whoever you are out there, get a hard asset. I don't care if it's a piece of land or a piece of Bitcoin, get some, because the next 5 years, maybe even shorter time frame now. I used to say 5 to 10 years, there would be that big monetary reset. Now it could be 24 months away for all we know. But it is.
And you're saying that land in the metaverse is not a hard asset, huh?
I don't do that stuff now.
Alrighty, guys. Listen, it's been amazing. We've got to do it again.
Thanks, Ran. Love
James,
you guys.
we'll chat to you soon. Chris, thank you so much. We'll chat to you soon. James, we've got to do, I think, another show together. I think it's been amazing. We should do one together. I'll coordinate it with you. It's been amazing. Thank you, my friend.
Happy April Fools, everybody. See you later.
Good to see you. Alrighty, guys, before you go, just remember that there are stories on the website there. We've got 2 stories that have broken on the website, which are definitely worth a read. There is a story about a new EIP proposal. It's EIP 1776. And if EIP 1776 goes through, there could be some great implications for Bitcoin and actually Ethereum. It's an Ethereum improvement protocol. It's like EIP 1559, but much more advanced. Really worth going to have a look at. And then I saw a story about Andrei Kronium and rumors that he may be returning. So you should go and check it out. It's on CryptoBanter.com. Let us know what you think about it. Let us know what you think about the story. I think it's a great story. Also, I did promise you that we're going to double someone's portfolio. Let's double 5 portfolios. Now, remember, if you have a ByBit account with the Crypto Banter referral link, then every day we're just going to double the balance in your account because you're part of our family. So everyone's saying that I don't go low enough. So I'm going to go low here. And I'm going to take 3 accounts and I'm going to double the numbers up to $5,000, because if it's more than $5,000, I'm not doubling it. It's just too much money. Let's go down here. So it's let me double let's see how much it is. Should we double 5 accounts? Let's double 5 accounts. It's April Fools. If you do win, it's not an April Fool. It's real. Let's see how much money. I think I'm going to get caught out here. And I'm going to end up paying someone a big sum of money. So these 5 account numbers, we're going to double the value in your account these are all accounts that have been opened with our ByBit referral link. If you haven't got an account, just do it. For the next 30 days, we're going to just double the value of accounts at random, as you've seen. All right, let's go back down there. I think I'm going to get caught out now. Today is the day where I'm going to get caught out. Okay. Let's see the value. Okay, let's go all the way down. Alrighty, so account number 1, $161. We're going to double that one. Account number 2, $40. We're going to double that one. Account number 3, $203. We're going to double that one. Account number 4, $407. We're going to double that one. And account number 5's got $708. We're going to double that account too. I mean, those are numbers. I mean, like $700. You got yourself another $700. Wow. Okay, so that's what we're going to do. Let's give away another one. Let's just find another one. But I've seen the numbers, so that's very bad. You got to hide the column first. Let's do one more. Come on, let's do one more for fun. Row number 4042. Let's just highlight it because otherwise I forget that I've chosen the account. And let's unhide. We said it was 4042, right? Okay, let's see what 4042 won. Row number 4042 wins. I think that's Carl's account. 69,420. 69,420. $69. We're gonna double your. We're gonna double your account. We're gonna double your account. All right, kids. Love you madly. See you guys on the weekend. We're gonna have a call-in show on Sunday. Miles, Sheldon, and myself, and maybe even Hustle. I think Hustle's in NFT Miami, but if he wants to join us, he'll join us. We'll do a call-in show, interact with you guys, and answer any questions that you may have, and just get a feel for the community. Otherwise, we'll see you on Monday. Until then, it's been an amazing show. Trade well, my friends. Can't wait for someone big to win. There must be someone who's going to have like $4,000 in their account. 4,999. I wish. I mean, it's going to cost us money, but so what? It's going to be amazing. Like, imagine on the day, like how cool it's going to be when